Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be doing a brief stock analysis on Alphabet Company, ticker symbol GOOG or GOOGL, and we are going to be going over their earnings, talking about some news that they sort of released during the earnings, and then looking at the balance sheet and some valuation metrics to try to get a good idea if now is a good time to buy or not. So first of all, we're going to look at the earnings. This is just their earnings report that they released a few days ago, February 1st, 2022, for the quarter and fiscal year ended December 31st, 2021. So they announced those earnings. The CEO says our deep investment in AI continues to drive extraordinary and helpful experience for people and businesses across our most important products. Q4 saw ongoing strong growth in our advertising business, which helped millions of businesses thrive and find new customers. A quarterly sales record for our Pixel phones despite supply constraints, and our cloud business continuing to grow strongly. So cloud, obviously a business segment for a lot of companies that has been growing pretty rapidly. So that's something we definitely want to take a look at. So for revenues for the quarter ended December 31st, so fourth quarter 2021, was $75 billion, which was a 32% increase year over year from the fourth quarter last year of $57 billion about. And then for the full year of 2021, they had $257 billion in revenues, which was about a 41% increase from $182 billion the year before. And that's a pretty substantial increase, and it's I think it is important to note that $182 billion in 2020, it's not like that was a big decrease from 2019. Some people, if you didn't know better, you might think, well, the reason that the increase this year was so great was maybe because they were doing well in 2019 and then they were negatively affected by COVID in 2020, so their numbers went down. But no, that's not the case. In 2020, their numbers still went up 13%, which is lower than 41%, but still increases in 2020. And then in 2021, their revenues grew 41%, which is pretty awesome. Operating income was around $78 billion with margin of that's around 31% there, which is up from 41 billion the year before. So increasing income and margins, which is awesome to see. And net income for the year around $76 billion, which is close to double the $40 billion from 2020. So that is pretty wild to see that big increase there. And then this kind of breaks it down by their segments. So in 2021, the Google search, this is just the fourth quarter of 2021. Google search and other brought in about $43 billion of revenue. YouTube ads brought in $8.6 billion. Google Network brought in about $9.3 billion, and that brings their total for the advertising portion of their business to around $61 billion. And then they just say other here, which is $8 billion of revenue. And I'm thinking that other probably includes like phone sales, Pixels, and maybe some other devices they sell and stuff like that, and then some miscellaneous stuff. And then their cloud business brought in about $5.5 billion of revenue. So the cloud business for them is definitely still pretty small portion of the business at this point, but as we'll see, it's definitely growing. As we can see, it grew from 3.8 billion in 2020 to 5.5 in 2021. So that's over a 20% increase, over 25% increase, even though it's not that big of an increase by the numbers. It's a large percentage. And the total acquisition cost for these revenues, this is traffic acquisition costs. So I think that's just for the costs of like the advertising portion of their business, I would guess, but I'm not really positive exactly what that means. It's $13 billion. So that right away takes away a chunk of their revenue from basically having to spend money to acquire those customers and that traffic that provides them advertising revenue. And another cool thing I think is they hired 20,000 people in the past year, which is just insane to think. They had 135,000 employees at the end of 2020 and 156,000 at the end of 2021. So it seems like a pretty big increase, and that's a good sign to show that their business is growing. From terms of an income perspective, Google Services is really the only profitable portion of their business right now, which is brought in about $26 billion in income. And then the Google Cloud and other like just miscellaneous stuff lost a few $1 billion. So Google Cloud definitely getting closer to being profitable. Lost about $1.2 billion in 2020 and only lost 890 million in 2021. So it's good to see. Hopefully they will be profitable this coming year. But at this point, we're just looking for lots of growth in that segment as other companies continue to grow their cloud business as well. So overall income in the fourth quarter of $21.88 billion. And then the big news that I wanted to talk about was the stock split. Basically, they announced the board of directors approved a 20-for-1 stock split. And it's obviously subject to shareholder approval, but basically the stock price will be divided by 20, and then everyone will get 20 times as many shares as they have. So we'll look at the stock price later and talk about, about what the stock price would be after the split. But now we're going to look at some valuation metrics. First thing here is the PE ratio. And just comparing Google's historical PE ratio to where it is currently. So over the past 10 years, it's really been in the 20, 25 to 30 range for a lot of the time. It looks like their earnings dropped off here in 2017 or 2018. So their PE ratio kind of spiked up there a little bit, but that was a bit of an anomaly. And then it has continued to stay pretty steady. You can see the stock price has grown pretty rapidly, but also the earnings have grown pretty rapidly too. So currently the PE ratio is around 27.5, which I would say is pretty decent compared to the last 10 years. It's pretty much sort of on average where the PE ratio is at for Google for the past 10 years. And comparing their PE ratio to the overall sector, they're in the communication services sector, and they're within this interactive media business. So this industry contains companies like Google, Facebook, Snapchat, DoorDash, I think Pinterest, stuff like that. So some of these other businesses in the maybe telecommunication services sector, they probably have a lot lower PE ratios and are a lot slower growing than something like Google. So it's not the absolute best comparison, but looking within the industry can give us a really good idea as well, since a lot of these companies are fairly similar to Google. So the overall average for the sector is 20.74, but for the industry of interactive media that Google is a part of, the average is around 28. So honestly, Google is pretty much in line right now with the average for their industry, just a slight bit below that at the moment, but right about in line with where the overall market is valuing the companies in this industry at this point. So we are going to take a look at a chart real quickly here as well, just to try to get an understanding of the maybe a little bit more technical perspective on Google and how the stock price has been trending, and where we might want to enter. So this is looking at 2 years. So we can see before the pandemic they were down here around $1,600, and they're almost double that right now, around $2,865, and they reached up around $3,030 just a few days ago. So it's really interesting just to see all that growth. And if we zoom in a little bit just to the 1 year, 1 day chart, we can see over the past 6 months, they've been trading, right around this 50-day moving average here in this blue line, just kind of going up and down below that moving average and slowly moving a little bit higher. And all of that action has been in this, maybe $2,700 to $2,900 range. A lot of it has been in there, and so this range right here is pretty solid, and it has a pretty large volume profile there. So it's probably going to be a fairly sticky price, and it's going to take a lot to move it significantly higher or lower than that. But once it starts moving past that, it could move fairly quickly. So that's one thing to keep in mind as well. But something interesting over the past month or so, they've been trending down, probably with the rest of the market. But they breached below the 200-day moving average, which is pretty interesting. And the RSI at that time was, below 30 there as well, around 27 maybe. So that definitely could have been a good buying opportunity from a technical level. And they, jumped back up right above the 50-day moving average and made that all-time high there just a few days ago on February 2nd, it looks like. And then now, again, they're right around that 50-day moving average. So at this point, not a bad price. It's pretty close to all-time highs, but from a technical perspective, it's really not bad at all. The RSI has jumped up a fair bit to around 57, so that's not great, but it's not terrible as well. And another thing to keep in mind is the stock split adjusted price. So that adjusted price will be, in the ballpark of maybe $125 to $150 per share. If the original price is $3,000, a 20-for-1 stock split would put them at $150 per share. So that's something to keep in mind. You know, be looking for that. I'm not exactly sure when that stock split is supposed to go through. They might have mentioned it on that earnings report, but I honestly forget. So definitely, I'm excited for that stock split. And you know, I know nothing fundamentally has changed with the business, and I know nothing for me fundamentally has changed, but a lot of companies, at least bigger tech companies like this, after they announce stock splits, you know, their stock price does see some pretty good growth after that, and it could be some correlation there or some causation or none at all. It's really hard to say, but it is an interesting trend that I think I've noticed for sure. So it'll be cool to see what happens with Google. So let me know what you guys do think of Google as a whole, Google after the stock split, what you think about the current price. And just want to thank you for sticking around to the end of the video, and I'll see you in the next one.